Well, good day all. I'm Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for Monday, and we're at the 20th of May, 2024. We have no major U.S. economic data reports from the government out. We do get the Johnson Red Book sales. We do get API numbers at the end of the day. We have a number of Fed members speaking. We had today 3 or 4. I covered all of them in my newsletter that went out this morning, and again tonight in the wrap-ups that they did. And to a person, it's higher for longer. They need more data to show that they're on the right track. They believe they're there. We'll see what the markets can hold, all right? But that's basically what they're saying. Is there a rush? No. Mester, Miss Mester, who had been calling for 3 rate cuts, is now saying, no, she thinks that was too aggressive. We won't get that. So they're pulling back, but that doesn't mean that they're not saying that there won't be a cut if needed. And I want to give that point, if needed. As long as corporate profits hold up, as long as the job market doesn't weaken, I still don't understand why we have to cut. But I'm sure that there's guys smarter than I am, figuring out that you're right, Ira, if it stays like this is what they're saying. But we think it's going to roll. And if it rolls down, the Fed has to get ahead of that, so you don't want it to start rolling and then tumbling. I get that argument, but I'm looking for what do we define as the initial roll. And I haven't seen that yet, at least something that makes me comfortable. All right. The big event of the week is going to be NVIDIA, one of the big events. They report on the 22nd. Then on the 23rd and 24th, we're supposed to get answers from the SEC as to whether or not they're going to allow ETFs on Ether. So there's been a couple of filings for that. We will find out if that's it. The market has shifted its sentiment to now thinking, the market thinks that that will be the case. Last interview I saw with Mr. Gensler, which couldn't have been more than 10 days, 2 weeks ago, he was very negative on it. That doesn't mean that he'll stay that way. I think the argument's hard to not give the ETF, given Bitcoin's out there. So I'm not understanding why it wouldn't be. Stock indices sort of mixed today, as you can see. Amazon just not holding up well. I'm not saying it's not going higher over time. It doesn't act like anything that wants to go now. Netflix has gotten new price targets from a couple of firms. Now I think Wedbush went up to $750 as a price target on this market. Google up a fraction today, Tesla down. I was watching Kramer on the market. You want to buy it at $25 increments on the way down. Okay. At what point are you wrong? That he doesn't tell me that because his examples were carrying to $100 a share. AMC got a boost. Nice. Everybody knows the dilution that's going on. The big movies are yet to come. They're not here. If is not a big movie. All right, it did very well for a kid's movie at $65 million over the weekend, but the others are all starting to trail off at this point. But you have the big boys coming at you for the Memorial Day, so they start and they keep coming, and that should be interesting to see how they do and what the word is. Does the buzz give them any life? GM down, Ford down a little bit today. Okay, let's take a look at at Walmart. Whenever I see WMT, I'm thinking waste management in my head. It's wrong. WMT, Walmart. We get all the other boys reporting, the Macy's, the Targets, everybody's coming out. The big word in Chicago newspapers today is that Target is going to lower the pricing on 5,000 items to compete head-on with Walmart in many categories, not store for store, but many categories. 5,000 items is a lot. There's a burger chain that's coming out now with $3 meals in the morning. So the idea that the consumer has got their hands in the pocket for this type of client is being looked at in a big way. And they are adjusting to it. Now, will that hurt is what you've got to ask yourself, because the profit margin that Target's going to take down, Target, to get these clients, some of them won't buy here. So that becomes the question. Can we fill any of the gap is what we have to ask ourselves. When we take a look, let me come back here to the swing lines. I went too fast. You can see the pattern is a lower low, higher high with that gap left in the chart. So it exploded out of the sideways action. Getting back through this is going to be a trick if you can get it done. You'd have to close, let's say, the 57.5 level to convince me, nah, this was just a flash in the pan. I don't see it that way. I see support in the 60-70 area. The market has spent now 3 days over the upper band. Generally, markets don't go more than 5. And futures, they can go 7 in stocks. They're a little bit different type of leverage too. Remember, you can get 50% leverage versus 90% in futures. One other thing, they're changing the trade date on the first of the month. So you buy a stock, you got to put money for it in that account tomorrow. You don't have, used to be when I started, it was trade date +3. Then it went to +2. Now it's going to be +1. So if you buy a stock, they are demanding that you have it in that account tomorrow or you liquidate, all right? I used to put out those liquidation forms all the time because people would buy and I go, well, where's the money? I said, we can't go the next day. The SEC rules are extremely strict. You're either liquidating down or you're doing it, and that's what you'll have to do. Understand, the brokerage firm isn't your enemy. They have to listen to the rules, and the rules are changing, and that's going to change for you. The market wants to take out some of the, how do I say it, excess. Because you can buy like mad and you don't have to deliver your money for another 2 days, gives you a bit of leeway. They're taking that away from you. In theory, you buy it today, you got to have your money tomorrow. It clears overnight. You can see how the market is working right through here. And can it get under the Bollinger Band? That'll be interesting. We'll see what the market does through here on it. You can see the base. That's the point that I've wanted to make. We got a big base in this. That's very bullish long term. This is a phenomenally run company. I mean, if I want to be with the discounters, the Costco's and this are it, and everybody else is the wannabes to join them. That's how I view it. So this is the equivalent of your NVIDIA. That's how I view this. You can see how the market is up here in overbought territory and over a Bollinger Band. Let somebody else have it. Now, on the MGM Resorts International, the trend is up. The market did just what you and I talked about last week. This was our lead chart. And I said, it doesn't have to go much further. You've now fought your battle at the 200-day average. You came up, and now it has to make a decision. Even if it runs now, it's going to have big resistance because what's going to happen is the Bollinger Band's going to fall again tomorrow and get much closer to the 200-day average. So for my money, that was about all that it was worth at that point. In Tesla, I understand what Kramers of the world are doing here. You have to get back over these highs where these arrows are to tell me you're coming up. You have resistance that's evident at 188, the 100-day average, and the Bollinger Band 174.95. But if you take out 171.43, my parlance says that you could go back to the lower band at 164.52. I don't have work that says you're going back this low at this point in time, but that is a possibility for the market since it's got the swing line down. In Freeport, well, you're up and you're overbought. Copper has gone up dramatically. It went to 520 in the futures. Now, be a bit careful here. What's happening is the big boys, I'm not talking traders, I'm talking the big trade houses got short caught in this market. And what they're doing is they're pulling in copper from around the world to deliver on their contracts. So let's assume that they're short here and they're caught. Well, we don't know what they bought that other copper for. So on their balance sheet, they don't have to take a big loss. They can deliver, and they bought that copper at X, they're delivering it at something. Their bookkeeping is going to be different than you think. Be careful. This is a pro's game when you get a short squeeze. In UGA, you've got a lower low, higher high. And yeah, they are bringing in the actual metal right now. And you can see where the market's sitting at. So you're back into an area here where you have upside resistance. You ended a downtrend. You lost the bearish embedded reading. And Is the market going to give us anything for the summer? We have to close over 68.48 to even get the inkling that's going to happen. And then we can start licking our chops and go, aha, if the driving season was a big move for Memorial Day, what's it going to be for the rest of the summer? And that's you want to be ready for that, because that's the thinking that's going to start taking place if you have that big weekend. In XLF, you don't want to see this market lose the embedded reading. Any close in the red line under 79 is a signal you're going back to 41.31 to regroup. Until that happens, these type of breaks are looked at by the pros. They'll consider should they buy them. But as I told you, momentum's everything in this market right here. In the industrial sector, you still have the embedded reading. So even though the swing line is down, the bias is up. As I told you when this happened here on Friday, I think that the market has, the pros are buying it. I don't know why. When I look at the Empire State, the Richmond Fed, I'm not seeing good numbers in manufacturing, and that's the industrial sector. Yet, until that number's lost, the pros will buy, looking for the upper Bollinger Band, get a reading under 79. They'll abandon ship like a rat as the ship's going down. Then we get to RSPD, the consumer. Now, I did a piece today for the Chicago Mercantile. I know Bloomberg plays part of that and so on. And the question that was asked of me today was, is the consumer in so much debt that they're running out of cash? And the answer had to do with the amount of arrears on credit cards that consumers are starting to see. And that number is going up. I don't think it's in a panic mode at all yet, but it's climbing. And we know that people are in trouble. How do you know that? Target is lowering 5,000 items. You think they're going to make more money on that? I don't. McDonald's is going down to a $5 meal for 30 days, and they'll have something behind it because, well, they'll get some traffic that comes in for those 30 days. You want them to keep coming back. Another burger chain just announced today a $3 breakfast meal. Telling you, people are going to do things, and that's the tight consumer. They are not buying the way that they were buying. When they're buying at Walmart, when they're buying at Target, they're buying staples. They're buying T-shirts. That's not a staple, I understand, but they're not running and spending a $30 T-shirt. They're buying a $10 item, a $6 item, whatever they can get their hands on. That is the difference. So yes, I do think the consumer is stretched. The trend, you're overbought. The market's going to fight for support between the 100 in green and the 18-day average. The trend is still up in the market, but be nervous if you take out the lows here of 48.12. That will be a sign that you've got a problem in the market. In the home builders, I picked this up the other day for you, well, the other day being last week, and I said, I'd be careful. You're up to the Bollinger Band. You have a market that lost its embedded reading. Why not go back to the 18-day average, which is often what happens, and you regroup. Now, interest rates are climbing again. I don't know if you've been paying attention, but each day they're adding 5 basis points, 10 basis points. Suddenly, we're getting to the point where you're seeing that show up here. So be cautious, please. Energies, total sideways action. I'm not seeing a trend, and I'm not seeing anything to do there. Gold, you know what's going on. The market accepts the fact that a lot of people don't have faith in currency. They want to own this. They see inflation. They see it every day where they're going. They want to own it. And it's really being bought around the world. It's not an American phenomenon. If anything, it's China that bought the most amount of it. And you're seeing that. So yes, bullish, not embedded yet, overbought by far. SLV stronger than gold. I've said that repeatedly. And now the gold-silver ratio tonight for the first time is showing silver weakening on futures versus the gold. One day doesn't make a trend, but it's the first time in about a week that I've seen that. Higher lows, higher highs. I would never tell one of my clients to buy over a Bollinger Band. Just not going to happen. Copper, the same thing. And as I told you, in copper, I'm telling you, part of the game. I've been around this I'm a broker since 69. Can you imagine that? So I've seen this game. I see how it plays. I know what the pros can do. A lot of book items that you can do. I bought that copper for $3 here. I sold it here for $4.50. Yeah, it went up to $5, but what's the difference? I'll move it here. I'll deliver it what I bought at $3, and I make $1.50 on my sheet. Got it? You take off your shipping costs and all that. I'm telling you, understand the game that the big boys can play. TLT, you see how the market is coming down a little bit here. You lost your bullish momentum. That's what I'm saying. It acts like interest rates want to climb a bit here in front of the economic data that we start getting on Wednesday. That's important. UUP in the dollar, I'd be very cautious. You had an outside day down. If you take out the highs of Friday, you don't want to be short. You might be going back to 28.70 to 28.68. And in the euro, if you take out the lows of Thursday, you can get that correction. It is embedded. It is still a bull market. We're going to get a lot of European data that'll give us a real good idea. Did they get enough to make that cut in June? I think they're going to make the cut. So I'm in that school of thought that says that's what they're going to do. Now, the one thing you have to understand is if you get any form of a miss in the video this week on earnings, watch out below. Will it be a long-term buy if it corrects? I think so. Nobody's got the products they have. What if they blow the socks off the market? Well, then you carry everything with it to a degree, and that's where I think you're at. I heard today that Jamie Dimon is making every new employee at Chase go through a course in AI. He equates it to the printing press. So that gives you an idea how big this event is. Now, AI has been around. It's the speed of the chips that can take the data we've had and make it useful. That is the difference. Which one of us have businesses we don't have databases? Come on. But getting your data, how do you ask a question, getting your computer to do it, figure it out. Now, the computer can tell you, you can say, I'd like to know how to do this, and it will tell you. That's a huge difference. This is going our way, and it'll be interesting. Do I ever believe it can beat the market? That's the big question. I've seen AI funds start. I haven't seen them win, though. We'll see. All right. So with that, I want to remind you that you can join me in the mornings for the futures and or the stocks and spider video, not the one that you see me do on TV. That's on your YouTube channel. That is the news one. I'm talking where I actually review the charts and get them all going. I come up with ideas with that. The charts will look this way. They'll be just colored like that. I use 5 indicators, so you'll understand the lines in a day or two with it. It gets pretty simple. Fundamental, technical analysis, they'll look like this on the website. We also give you a phone app that'll come in and you can play the videos. But the neat thing on the website is when you click play, number one, you can make it full screen too. When you click play, there'll be a scroll bar. And as you scroll in it, either one of these, it'll tell you the section you're in, so it saves you time. And I keep everything in compartments, and I think you'll like what you see with that. We'll look at daily, weekly charts. We're going to cover 40-plus futures, 40-plus spiders, ETF stock charts, Monday through Friday, and on the weekend, we'll do the weekly charts and look back at the dailies for ideas. Free access to my special reports are included. I intend on trying to do another one tomorrow, probably in the spider stock camp, so that should get to be fun. How do you get this? Just go to our area of our website, iraepstein.com research. You can move your cursor up here. That special gold report I had done, it's still up. Today's the last full day up. I don't know the time it'll come out off the website on Wednesday. It'll be gone. So it could be 12:01. The computer does it, not me. Be ready for that. So if you want to see that gold report, go there, and it's really an interesting one because I cover in detail seasonality, price counts, weekly charts, daily charts, GLD, and the futures. I'm Ira. You have a good evening.